Alright, today I'm going to show you guys how to apply Fibonacci measurements to Qualcomm so we can see if the market is buying them and where is the Fibonacci golden zone. This one is going to be more of one of the easier ones if you ask me. It's only going to require 2 measurements, so it's a really good starter stock to learn how to apply the Fibonacci technique and find the golden zones. The link to my book is in the description if you want more details, but this book is going to have a lot, this video is going to have a lot of information on it. So first we want to take into account a lot of information from Qualcomm, so we want to go back at least 10 years. So the chart I have right now is 10 years on the monthly. We're going to set up Fibonacci so your ratio looks like this. You're going to have the 23, 38, 50, 61, 70, 78, and 88. Those are the exact values. You can pause the video right here and get the exact values, the right curves on your system. So now what we're going to do is we're going to start off with the very low that we see over here that goes back into 2016. And we're going to anchor a point from right here. And we want to go to this top right here of 230 and 63. So I'm going to keep my fibs kind of to the far left only because I don't want my chart to have all these lines in there. So I'm going to take it up here to the high of 230 and 63 cents, and we're going to edit that and we're going to make the prices exact, which means the high is already correct, 230 and 63 cents, and then the low is going to be 42 and 24 cents. And wouldn't you know, it already marked them exactly, which honestly this doesn't happen that often, at least not with Thinkorswim. So we're going to get out of this screen. So now what I do is I ask myself are there any of these Fibonacci's hitting the current price right now that are of importance? So I don't want to keep every single lineup because these charts just get very crowded. They get very ugly. It creates confusion. So I don't want to do that. So for example, here's the price right here at 159.83, and we have the line that's actually right on it. So I know, for example, I need the 38.2%. And then we're also going to keep one line above it to find the supply zone, and I'm also going to keep one line below it to find the next demand zone in case the price tends to, if it starts to fall a little more, then I also want to know where it's going to fall. However, these Fibonacci's right here, the 61, 70, 78, and 88 are a little too far from the price, and they're probably not going to help me out right now. So we don't need them, so we're going to go ahead and get rid of them. It's going to make the chart look a lot better. So we're just going to hide those. Okay, so if you read my book, you understand that my technique to laying off Fibonacci is a multi-dimensional approach, which means we need at least 2 fibs for it to happen. So we already went from this low, and there's different swings that have occurred. There's this swing right here, then there's another swing that occurred right here. However, these are real close to this price, and I've already done this chart. I've kind of cheated. So I already know these are not the next lows that we're going to anchor to the high. We need a higher swing. So if we continue following the price action past 2019, we can see that the market, the Qualcomm price went up, it created a swing, and there's a swing low right here. So we're going to take a stab in the dark, and we're going to see if maybe this low right here, anchoring this low to this high, will give us some value and will create another zone. So we're going to start from right here, anchor it to the top right there. And yes, it does create another zone for us. So we're going to get those prices accurate. The low on this one, the low on this candle is going to be $58 exact. And then the high on this candle is still the same one, 230 and 63 cents. And we want to make sure everything's showing. I don't know why that just happened. Okay, and we can see that the price is sitting right here. So once again, we have to look at this second Fibonacci and see which lines do we not need so we can go and erase those. So from right here, the 50 is right here. So you can see already we have 1 zone, 2 zones right here, this right here. But these lines down here, I don't really, you know what, we can keep this actually. Let's keep this and I'll show you why. However, these lines are not necessary. The price is so far from them unless I think there's some kind of natural disaster, some kind of market disaster. We're going to see Qualcomm going down to these prices. Why is this not hiding? Okay, there we go. And that's all we need. So now, here's what we know. Based on this, we can see these big wicks getting bought up right here. These are whales. These are buyers buying these dips. and we know exactly where they're buying the dip. They're buying the dip into this zone right there. See that? And that right there is how we determine where whales are buying the dip at. You can see that going back to 2022 September through November 2023, they were heavily buying into this dip right here. So the reason I left this here is because let's say the market loses an appetite for Qualcomm right here, soaking up shares from 144 to 158, then we know that they're going to move the market down on Qualcomm. They're going to bring it down to here, and this is where they're going to buy the dip because they've done it before in the past. However, the market has bought Qualcomm for 1, 2, 3, 4, 5 months. I know this month hasn't closed yet because we're still on the 11th and we still have a whole half of the month left. But if this candle closed right here, then that tells us that the whales are okay buying in this level right here. So if you were to buy the dip, then you also have to know where are the majority of the whales going to be selling at, assuming they're not really going to hold this. Let's say you're not going to hold this forever. So now what we're going to do is we're going to do a Fibonacci from high to low, and this is going to help us find the supply zone, at least the most nearest one. So we're going to go from the high of 230.63 this time, and we're going to anchor to the low, which is going to be this candle right here, and the low on this one is 151.39 cents. I don't know why these boxes just keep erasing. Save as default. Okay. So now we have all these lines going up, and we want to ask ourselves, where is the most current supply zone? And we have to use the candles for guidance. So we have to see where the sellers at. And as you can see, the sellers are actually real close by. They are right here. The most nearest, like the biggest cluster of sellers, they're right here. And we know that from these 3 candles right here because the buyers attempted to push the price up on these 3 months, 1, 2, 3, and they were quickly met with resistance and they slammed the price down. So we know that buyers and sellers are pretty much right next to each other, and we can almost just erase this line right here. However, if buyers were to push the price up and above 180, then all these lines up here show you where they're going to go. So the next place they'll likely go after this is, we can erase this, we can erase this, we can definitely erase this, and we can erase this, and they would go right here. This is where the market would take Qualcomm, assuming if they clear the supply zone right here. But if you were in Qualcomm for like a really short-term trade and you were trying to figure out your risk reward, like where's your stop loss and where's your reward, well, your stop loss could be right here underneath these candles because they've already been known to buy this level, and then your actual reward could be like the top right here, 180. So then you can do the math. So stop loss at 152 and then your reward at 181. So anyways, that's how you would chart Qualcomm with the Fibonacci sequence to find current demand and also current supply zones. Hope you guys learned something. Stick around, subscribe, and then we'll see you guys next time for the next lesson.